Cover today. A leading technology solutions provider specializing in software testing, digital transformation, and advanced IT services. This is what we are going to cover in this particular session. The history of Expleo Solutions, their unique business model, and of course, the financials, strategic initiatives, and the future potential, along with the valuation. So, eventually, in the end, we'll cover the valuation part as well. So let's start with the history of Expleo Solutions, one of our recommended stock. And of course, in July, Expleo was not in the buying list, but the August list that we are going to share it with you today. So the August report will be shared along with this video. So in that, Expleo Solutions is also in the buying list again. So right now it is below the MVP. So established in 1998 as SQS India BFSI. So that's the name. SQS India BFSI was the name in 1998. So from Chennai. So Expleo Solutions initially focused on software testing and quality assurance. So software testing is what these guys do, primarily. Then it got rebranded as Expleo Solutions following its integration into the global Expleo group. So gaining, of course, after the integration, it has got a stronger global presence today. So it's a key player in the IT services. So known for its software and digital assurance services. So this is basically the business model of Expleo Solutions. So first is, it's digital and software services. So they provide software testing, quality assurance, uh, other related technology solutions. They also provide AI driven solutions as well. This will cover the AI related, will cover in the valuation part as well. So digital consulting, AI driven solutions, data analytics, process automation services, and strong expertise in sectors like banking, financial services, and insurance. That is what we call as BFSI. And of course, now they are into retail, automotive, aerospace, and defense as well. But primarily, they are into BFSI. That is banking, financial services, and insurance. So this is where they are doing a lot of testing, software testing. Next is their strategic industry focus. First is their banking and financial services. So this is where they are helping banks or financial institutions to upgrade their digital capabilities, modernize the systems, and ensure compliance. So compliance is a big part when it comes to regulated players, whether it is banks or financial institutions or insurance companies. So compliance is a big thing. So these guys are helping them. Of course, they have their own software testing and digital engineering in automotive and aerospace as well. Retail and QSRs also they are providing the same service. Then comes to their global footprint and the strategic regions. So they have got strong presence in India, US, Europe, Middle East, predominantly in UAE and Saudi Arabia. So they are generating close to 50-51% of their revenues from Europe. So they get major chunk of their revenue from Europe. That is almost 51% of their revenues. Coming to India and the Middle East, you can call it the Asia Pacific region. So this is where they are generating close to some 30-35% of revenues. Remaining 10-15% they are generating from US market. So they are not generating a lot of revenues from US. They are more focused on Europe as a market. And of course, recent expansion in the US and Middle East with significant new opportunities in India as well. So recently they are growing their global presence in US and of course in Middle East as well. So these are their recent strategic initiatives. First is account based growth. So they are focusing more on growing the existing customer relationship with dedicated account managers and of course targeted marketing. So, of course, this is what they have mentioned in their annual reports, conference call transcripts, or investor presentations. So, I would ask you, since it is the strategic initiatives and all, so take it with a pinch of salt. So, we cannot take everything at face value. But of course, this is what they have mentioned. They have got major success in deepening existing client relationships So basically, that's a jargon every other IT company always use. Next is geographical expansion. So this is what they have done. So they have set up new operations in Saudi Arabia and strengthened their presence in Dubai. So of course, Saudi Arabia and Dubai is their Middle East region, and they are increasing focus on the US market as well, particularly in AI and data driven solutions for the QSR industry. You can see they are using a lot of AI in their annual reports. If you go and read the annual report, you'll realize AI is being used multiple times. So innovation and their AI investments. So they have launched Expleo.ai. So a platform, AI platform offering ready-built solution to global clients. And of course, they have dedicated AI lab in Pune, so executing 50 plus proof of concepts globally. So this is their, what I would say is a growth segment where they are spending a lot of money, R&D or investments or capex. They are doing a lot of capex on AI investments. Next is coefficiency and operational excellence. So improved profitability by stringent cost management and operational efficiencies. So reducing overheads and sales expenses for higher profitability. So see, you can see like everyone is laying off the employees these days. Even TCS is also laying off the employees. Infosys is not hiring, or they are stopping the appraisals. So you can see IT is not doing that good. So here you can see reducing overhead. So basically they are also trying to lay off some employees as cost management and to boost the profitability as well. Now coming to the challenges and risks. So this is the most important slide of the presentation. So continued slowdown in the European market due to geopolitical or economic conditions. So generally that's what happening, across the world, not just in Europe. India also there is slowdown in IT. US also there is slowdown. Europe, generally everywhere there is slowdown happening in the IT segment. High initial investment in AI and digital capabilities impacting the short term profitability. So right now the margins of Expleo Solutions have been dipped. If you observe for the last 1 2 years, the margins are coming down. I mean, it's because they are investing a lot of money in this AI related, that softwares and all. So that is one reason where the margins are taking a hit. But of course, in the short term, maybe the AI will help them in the long term, to scale their margins going forward. Competitive pressures from global IT and consulting giants. So there is intense competition out there. So it's, supply is very high, demand is very low. Future growth prospects for Expleo. Of course, we have got significant opportunities when it comes to AI, data analytics, that is big data analytics, or digital transformation across BFSI, retail, and automotive sectors. And that is what Expleo is also trying to get a chunk of that market and want to ride that wave eventually. Continued expansion in USA or Middle East or Indian markets, especially targeting the GCCs, that is global capability centers. So, but having said that, as of now, they are generating more than 50% of their revenues from Europe. Whatever US or Middle East or India, they are trying to grow their footprint here as well. Leveraging the shift towards AI driven digital first solutions globally. Again, take it with a pinch of salt, because every other IT company you go and look at, if you try to read their annual reports, AI and digital, these are the two things they use quite often. So leveraging, trying to ride the AI wave or the digital wave and all is pretty common when it comes to IT companies. So future growth prospects is what we are discussing here. So since it's an IT service company, so they can use the words digital, they can use AI, but again, it will come in the future, so we never know. But of course, since we are, I mean, it is one of our recommended stocks, we are pretty hopeful, and the management is also pretty confident and hopeful that they'll be able to make something big out of this opportunity that is available. You can see the screen. 1 second, let me check. Yeah. So if you observe carefully, so Expleo is growing its sales at a very high rate. For example, 2014 close to 200 crores, 2025 close to 1000 crores. So 5x growth in sales in about 10 years, and there is consistency as well. Like you can say 194, 214, 260, 260, 270, again 280, 270, 300, 700, 900, 1000. So you can say there is consistency in sales as well. But when it comes to margins of Expleo, you can see there is a lot of fluctuation when it comes to margins. Of course, it is always been profitable. So the net profits of Expleo were always positive, but there is a bit of cyclicality. I wouldn't say it is highly cyclical, but there is some cyclicality in the business, and the margins, and in the margins also you can see that fluctuations. And right now you can see it is close to 16%. And if you go back and look at the history, the lowest is somewhere around 15%. So Expleo is right now uh, at the bottom of that margin curve. So when you look at the highest, that is the maximum margins it generated and the minimum margins it generated, right now it is close to that minimum number, around 15, 16, which is the lowest. And of course, you can see the net profits also dropped from 134 in 2022. The current number is somewhere around 103. But sales went up. There is sales growth combined with margins drop. So why the margins have dropped? That is the question. If it is cyclical, then it's okay. Margins will eventually revert back. But if it is structural, then there is a problem. The margins might not go back to its a long term average of around 20 or a long term high of 22, 23 and all. To understand like why the margins have dropped recently. First, reason number one, increased investments in the growth initiatives, which is partially structural. They are investing a lot of money, which I have already discussed. So, Expleo Solutions significantly invested in expanding geographically. That is into USA, Middle East, in Dubai. They have started their operations in Dubai as well. So, including setting up new operations, which I have already mentioned, that is Saudi Arabia and Dubai as well. So, of course, initial investments and high initial expenses for establishing the operations. It might be hiring the employees or the office own buildings or rent. So new sales team infrastructure temporarily pressured margins. So as you can see, operation, I mean, that is operating expenses, which is partially structural, which are going to stay because these are new set of operations that came onto the P&L. So if not completely, but a part of it is going to kind of affect the margins. So that is the reason I have mentioned it as partially structural. The reason number two, that is higher employee and operational cost, which is also structural. So rising salaries, especially for skilled talent in areas like AI, digital transformation, and software testing. So I mean, since they have got some their own AI lab in Pune, which I have already discussed, where they made some 50 prototypes and all. So they are trying and testing them. So of course, they need high skilled employees for that. So rising salaries is going to again impact the P&L margins. Next is investment in new talent, training, and resources to support their AI initiatives like the AI lab in Pune. Further elevated the short term cost. So it is short term cost because most of this is one time cost. And the most important reason is economic slowdown in the key markets. What is their key market? It is Europe. Europe is their key market. So Europe, a significant market for Expleo, faced economic uncertainties, reducing demand for certain IT services, and of course putting the pressure on the pricing power. A slowdown typically reduces the customer budgets, leading to lower margin contracts or delayed spending on digital projects. So since there is slowdown in the overall Europe market, which affected the margins of Expleo as well, which is cyclical. So economic uncertainties or slowdown or recession, these are all, I mean, cyclicals. When it comes to economic growth, I mean, there will be periods where the economic growth will be very high, and followed by periods where the growth will be quite lower. So, which is pretty cyclical. And right now, it is almost at the bottom of the cycle. So, we can expect eventually the cycle to revert back, and we may not know the timeline exactly. But since it is cyclical, generally that's how cycle perform. So, reason number four is pricing pressure and competitive dynamics. Again, it is structural. So, increased competition from global IT giants and consulting firms has restricted the pricing flexibility. Of course, they have to lower the price when there is, cutthroat competition out there. And whenever during the times of economic slowdown or recession, generally the demand goes down, and the existing players, because the supply is higher, the existing players has to compromise on the pricing part. So pricing flexibility has also been affected, so which impacted the margins in a negative way. So these are the four reasons. Three of them are structural. Again, competition is also structural, so which is going to stay. uh, Again, economic slowdown is cyclical. So put it simply, whether it is cyclical or structural, I would say both. Partially structural and partially cyclical. When you look at the structural part, so Expleo's margins pressure is largely driven by the deliberate structural investments that they are doing, whether it might be setting up operations in new markets, or the AI initiatives, or high employee cost, again related to that AI and new operations. The competitive environment, which is requiring them to continue their investments so that they can remain competitive, which is also structural, and that is going to stay. When it comes to partial is cyclical, again, economic slowdowns in key markets like Europe causing short term revenue and margin pressures, but I said these are cyclical, expected to reverse when economic conditions improve. So I would say both. There is structural reason for the margins to drop, and there is a cyclical reason also. So the conclusion is pretty simple. Expleo's margins drop is mainly due to structural factors, reflecting their strategic choice to invest for long term. But of course, they are investing that money for long term, so they are expecting better benefits out of those, long term investments. So these investments will likely enhance the future profitability. So right now they are taking that pain. Right now the margins are kind of dropped because of these investments, but eventually these same investments can boost or enhance the future profitability, but they currently impact short term margins, which is okay as long as they generate long term wealth. Some cyclicality exists, particularly related to economic conditions in Europe, which should improve as the markets recover. So this is basically the valuation that we have for Expleo here. So coming to the revenue growth, so my expectation for revenue growth is like 10-year CAGR. That is, I'm expecting somewhere around 8. So last 10-year growth is 17%. Last 5 years growth is 31%. Last 3 years growth is 11%. So I am assuming more conservative approach because of the overall conditions that I have mentioned so far. Because IT, I mean, most of the business, if you go and check what's happening in the IT sector right now, so it's not that, I would say overall situation, which is reflecting in my growth rate as well. So I'm being pretty conservative. Of course, the historical growth rates were much better than this, better than my assumptions. But of course, if Expleo can pull off better growth going forward, that would be a positive surprise for me, which is okay. But being conservative, I am only assuming 8% growth for the next 10 years. So that is my growth assumption. Coming to the margins part, the current margins, that is the current EBIT margins for the business, which is in 2025 is somewhere around close to 12%. That is 11.74. I think they will uh, improve whatever the AI investments or whatever the new operational setup and all. So that is what affecting the current margins. But most of that is the setting up cost. So once that is done, eventually that I mean geographic locations or the AI investments that they are doing, those segments also will bring in lot of revenue that will add to the overall profitability. So assuming that margins can grow from here, but the average long term average is somewhere around 16 or 17%. But what I am expecting is not 16 or 17. I am again being very conservative when it comes to the margins expansion also. So currently it is close to 12%. I am assuming that eventually once the economic recovery happens in Europe, the key market for Expleo, and once the AI and whatever the operational costs that they have, once that normalize, the margins can go back to its close to its long term average of around 16%. But I have only assumed 15%, being very conservative. That is my next assumption. Coming to sales to capital ratio, so the current sales to capital ratio is 2.35, which is pretty low when it comes to the long term average. So for every 1 rupee that they spent, they were generating close to 5 rupees in sales. So that's what I have mentioned, not 5. Again, I am being slightly reasonable here. So my expected sales to capital ratio is 4, which is taken from here. Of course, I have taken a lower number than that, because once the margins expand, once the growth also comes back, so 4 is a very reasonable number. So as you can see, based on all the assumptions and all, the value per share is somewhere around close to 1400, and the current share price is close to 1200. So the margin of safety is somewhere around 14%. And like I've already mentioned, Expleo is one of our recommended stock, and it was not in the July list, because July list the share price went up slightly, crossed our MBP, but in August it is again below the MBP. So in the August list you will find Expleo Solutions, but again very close to its MBP. It's not like having 30-40% of margin of safety. Some 10-15% margin of safety is still available. So first entry price, it is close, the current share price is close to, very close to its MBP. So that's what I wanted to cover